Hello students, myself is Parminder Singh from Prab Kripa classes. Our today's topic is business services. In this course, we will discuss what is the meaning of business services and what are its various types. We will also understand the features of services and the difference between services and goods. We will also understand the meaning of banking and what are the various types of banks and what are the functions which are performed by commercial banks. Then we will understand what are the various types of bank accounts, what is the meaning of demand draft, overdraft, discounting of bills, and cash credit. All of us use e-banking, but we will try to understand its meaning and its various benefits. We will also learn the main types of digital payments. The name of the chapter is Business Services. First of all, we will understand the meaning of services. It is possible for us to understand the meaning of services if we compare it with goods. Suppose we go to the market and purchase a mobile phone. We can see the mobile phone, we can touch the mobile phone, as the mobile phone has its physical existence. So goods are tangible. Tangible means having physical existence. On the other hand, services are intangible. Intangible means when a thing does not have its physical existence. We cannot see the services. We can only feel the services. When a patient visits a doctor, doctor provides him advices or consultation. He is providing his services. Can you see his services? No, we cannot see. So the services are intangible. Another example of services is if we go to the company secretary and seek his consultation as we want to open a company. He tells us the various formalities which we will have to comply with if we want to open a company. Can you see his consultation? No, we can only understand, only feel. So, services are those which provide us satisfaction. Now we understand the characteristics or features of services. Its features are intangibility, inconsistency, inventory, involvement, and inseparability. We will understand each of its feature one by one in detail. Nature of services. There are 5 basic features of services. These features distinguish the services from goods, and these 5 features are also known as 5 eyes of services. Now we will discuss these features one by one. First is intangibility. The physical products like a television, mobile phone, shirt, ice cream, etc. are tangible in nature. Why we call them tangible? Because we can see, touch, hear, smell or taste them before buying it. But the services are intangible. We cannot see, touch, taste and smell services. Services do not have physical existence. One can only feel or experience it. Examples of services are the services of a doctor, of a chartered accountant or company secretary, etc. Intangibility of services creates problems for marketing as it is difficult to make the consumer convinced about the qualities of services. Suppose if you go to the market to buy a shirt, you can touch the shirt and feel that whether it is of cotton or of silk, whether it is of premium quality or lower quality. But when someone approaches you to buy his services, for example, for insurance, you cannot feel it, you cannot touch it, the insurance, or see it. So it is very difficult to sell the or market the products like insurance. So a lot of depends on the reputation of the service provider when someone approaches you for a service. Next feature of service is inconsistency. Physical goods are produced with a high degree of standardization. Suppose we go to the market to buy a soap named Pierce. Pierce is a soap, and each Pierce soap has its own standardization. Its color will be same, its smell will be same if you buy the same type of product, because the companies produce the same product with high degree of standardization. We will not find that the pear soap is having different type of shapes if it is of same color or same quantity. But this type of standardization or similarity is not possible in the case of services. Services have to be performed exclusively each time. If you go to the doctor, whether the doctor will have its services standardized, because on one day you may be suffering from fever while the other patient may be suffering from headache. So he will have to give his consultation or give his services according to the problem being suffered by the patient. So different customers have different demands and different expectations. Services are provided as per the needs and requirements of the client. If a person goes to an advocate for consultation with regard to his dispute with his tenant, the advocate will give his advice accordingly. If a person goes to the advocate in regard to his dispute with his neighbors, the advocate will give his advice accordingly. We may also approach a chartered accountant for different services. It is also possible that if we approach the same chartered accountant, we may experience different service on two different occasions, because it is quite possible that on one day he is having some dispute with another client, or on the another day he is very happy because he has earned a good client. So we may experience the different type of service experience on two different occasions from a same professional, depending on his mood and pressure of time of the day when the interaction is taking place. It is quite possible that if we approach a CA for his services during his busy time, he may not be able to provide us proper time. He may only provide a minimum time to us. So further, the quality of the services also depends on the fact which individual performs the services. It also depends of the nature of the person who is providing the service. So there is lot of inconsistency in the case of services. Next feature of services is inseparability. Goods are separable from their producers in terms of time and place. Suppose a TV is manufactured in Japan. It is then sent to India. Then it is sent to some another state, say Delhi. Then it is sent to some another market where the customer buys it. In the case of goods, production and consumption occurs on different dates, but services cannot be produced now for consumption later on. if a person approaches a doctor, he will give his consultation on the spot that he is to use this type of medicine, or he should not do this one. It is not possible for a doctor to standardize his services. He has to give his services on the spot, and we understand what the doctor says to us. We will understand his consultation properly. So production and consumption of services takes place at the same time. When we visit the doctor or other professionals, they create and offer services at the same time. Services are performed in the real time. When we approach a chartered accountant in connection with income tax or other purposes, he will give his advice on the spot, or may ask us to come on some other date. So services are performed in real time. It is not that we approach the chartered accountant and he will have a package of services and will give it to us and we will go away. Services are produced as and when demanded. Next is inventory. Goods can be stored, preserved for future selling. For example, most of the consumer durable companies like TV, AC manufacturers accumulate inventories prior to the arrival of festive season so that they can meet the demand when the festival season arrives. But in the case of services, services cannot be stored for future use or selling. For example, if we go to the airport, some seats may remain unoccupied in the airlines. We may go to the hotel or theaters. The unoccupied seats cannot be stored and they cannot be carried over to cater supply at the time of peak demand. Unused capacity, that is unoccupied seats in the case of airlines, theaters or hotels, is the business opportunity lost forever. The service has to be performed as and when the customer asks for it. They cannot be performed earlier to be consumed at a later date. Doctor or company secretary has to provide service as and when the client comes. The next feature of services is involvement. One of the most important characteristics of services is the participation of the customer in the service delivery process. A customer has the opportunity to get the services modified according to the specific requirements. Participation of both the parties, that is service provider as well as the client, is necessary. A doctor cannot give proper service if the patient does not tell him his illness correctly or remains silent. Another feature of service is ownership. If we go to the market and purchase something, the goods are sold by the shopkeeper. Then the ownership is also transferred and the buyer can resell that product. But in the case of services, the user has just an access to the service. If we go to a hotel and we stay in a hotel room, in that case, we only use their services. The ownership of the hotel or the hotel room rests with the service provider. We may also add that we have already uploaded various courses on the subjects like email writing, present tense, future tense, past tense, cyber security, most common mistakes in English grammar, letter writing, business studies, DBMS, and much more. You can look out for the same on Google, YouTube, Udemy, tutorial points, Affiliate, and other sites. Now we will understand the difference between services and goods. First point is intangibility. Services cannot be touched because they do not have physical existence. Whereas in the case of goods, they can be touched as they have physical existence. We have before us pen drive. It is a good, we can touch it because it has physical existence. Next point is inconsistency. Different customers have different demands and expectations. If we go to a chartered accountant, we will tell him our own needs. The other customer may come to him with his own requirements. So different customers have different demands and expectations. In the case of goods, goods are produced with a high degree of standardization. If we go to the market to buy a pen drive of the same brand, we will find that all the pen drives of the same model of the same make manufacturer are of similar type. They are manufactured with a high degree of standardization. Next is inseparability. Services cannot be produced now for consumption at later date. For example, the doctor has to provide his services only when a client or a patient comes to him. Whereas in the case of goods, separation of production and consumption is possible. A pen drive or a TV may be manufactured in some other country or in some part of the country and may be sold in another part of the country. Inventory. We cannot keep the services in stock. For example, unoccupied seats in airlines, theatre or hotels cannot be kept in stock to be used or to be provided to the customers as and when demand comes. Next is goods cannot goods can be kept in stock. We can keep TV, mobile phones or pen drives, etc. in stock. Next is involvement. Customers participate in the production. Whenever we approach an advocate or chartered accountant or company secretary, we tell him our need and according to our requirement he will guide us. So we participate in the production or in so that he may advise us accordingly. Whereas in the case of goods, we do not participate in production. Whether we have participated in the production of this pen drive, no, we have simply went to the shopkeeper to buy the product. Next is nature. Services is an activity or a process. For example, watching a movie in a cinema hall. In the case of goods, it is a physical object. For example, table, chair, fan. Type, heterogeneous. In the case of goods, these are homogeneous of the same type. All the products are homogeneous. Ownership. There is no transfer of ownership in the case of services. But if we go to the market to purchase a goods and make the payment to the shopkeeper, then the transfer of ownership happens. Next, types of services. First is business services, then social services, and other are personal services. We will discuss it one by one. Services can be classified into three broad categories: business services, social services, and personal services. Business services are those services which are used by the business enterprises for the conduct of their activities. If you are a businessman, you are using the banks for performing various activities like taking loan or depositing your cash. We may be availing the services of insurance to insure our employees or to insure our shop or our stock. We use the transportation services to get the products transported from the wholesaler to our shop or to send the products to the client's destination. We use the warehousing to store our products. We use the communication services to communicate with the wholesaler or our clients. Next are social services. Social services are those services that are generally provided voluntarily, keeping in mind certain social goals. What are social goals? They may be to improve the standard of living of weaker sections of the society, or our social goal may be to provide educational services to the poor children. Organizing free health camp is also a social service. The social services may be provided by individuals, private and independent organizations, or by some government agency. Then comes the question, what are the personal services? Personal services are those services that will depend upon the customer's preferences and demands. The personal services cannot be consistent in nature. They will also offer depending upon the service provider. For example, tourism, recreational services, and restaurants. Now, the topic before us is banking. All of us use the services of the banks. So, banking means the business conducted or the services offered by a bank. Banking offers services, banking offers savings, loans, and investment products and services to individuals and businesses. What is a bank? Bank is a financial institution which has been granted license by the competent authority or a regulator to receive the deposits and give loans. Banks may also provide financial services such as wealth management, currency exchange, and safe deposit boxes, which are also known as lockers. In most countries, banks are regulated by the national government or by the central bank of the country. The bank lends the money you deposit at the bank to others in the shape of vehicle loans, credit cards, housing loans, personal loans, and other loans. How the bank earns profit? Just like other businesses, the goal of the bank is to earn profit for its owners or its shareholders. For most banks, the owners are shareholders. Banks earn profit by charging more interest on the loans than what they pay to the people for their deposits. For example, a bank that pays 3% rate of interest on savings account, and it may charge 7% rate of interest for the loans. So it earns a gross profit of 4% for its owners. Now, banks can be classified into the following. First is central bank, commercial banks, cooperative banks, and specialized banks. First comes the central bank. What is the role of the central bank? Central bank of any country supervises, controls, and regulates the activities of all the commercial banks of that country. It controls and coordinates currency and credit policies of any country. In India, Reserve Bank of India is the central bank. The central bank typically acts as the lender of the last resort to banks and other eligible institutions that no longer have other available means for borrowing and whose failure to obtain credit would dramatically affect the economy. We will give some example. In the case of Yes Bank in India, a few years back, Yes Bank had suffered a lot because nobody was ready to provide him loan to run its operations because its non-performing assets had increased many a times. In this that situation, the Reserve Bank of India and the finance ministry had formulated a plan, and they bailed out the Yes Bank by in which the State Bank and other banks provided money to the Yes Bank, and today Yes Bank is performing very well. It is not that the central bank will bail out each and every bank. The central bank or the reserve bank or any central bank of any country will perform its role of lender of last resort on case to case basis. Next is commercial banks. A commercial bank is a financial institution which accepts deposits from the public and gives loans for the purpose of consumption and investment. Commercial banks also provide safe deposit boxes to customers and also provide various types of cards such as credit card, debit cards. In India, the commercial banks are governed by Indian Banking Regulation Act 1949. There are two types of commercial banks: public sector banks and private sector banks. Public sector banks are those banks in which the government has a major stake. Public sector banks usually have to emphasize on social objective than on profitability. On the other hand, private sector banks are those banks which are owned, managed, and controlled by private promoters, and they are free to operate as per market forces. However, private and public, those type of banks are regulated by Reserve Bank of India in India. There are a number of public sector banks like State Bank of India, Punjab National Bank, Bank of Baroda, etc. The examples of private banks in India are HDFC Bank, ICICI Bank, Kotak Mahindra Bank, IDFC First Bank, etc. Next are cooperative banks. A cooperative bank is a small sized financial entity where its members are the owners and the customers of the bank. They are registered under the Cooperative Societies Act. They are governed under the Banking Regulation Act 1949 and banking laws applicable to Cooperative Societies Act 1965. As the name suggests, they are formed on cooperative basis. They are meant essentially for providing cheap credit to its customers, to its members. Cooperative banks serve an important role in the Indian economy, especially in rural areas, that is, agricultural financing. They also provide loans and other services to non members. In urban areas, also, they serve mainly to small industry and self employed workers. Now, there are other type of banks which are known as specialized banks. They are created for special purposes, for example, development banks, export import bank, regional rural banks. These banks provide financial aid to industries, heavy, turnkey projects, and foreign trade. Now we will understand the various functions of commercial banks. Among its functions are acceptance of deposits, lending of funds, check facility, remittance of funds, and allied services. We will understand each of its function one by one. First is acceptance of deposits. Banks accept deposits from the public in the shape of saving account, recurring deposit, and fixed deposit, etc., and pay interest to the public. After having received these deposits, the banks do not keep it with themselves. They lend it to the other persons. So the next function is lending of funds. Second major activity of commercial banks is to provide loans and advances out of the money received through deposits. These advances can be made in the form of overdrafts, cash credit, discounting trade bills, term loans, and other miscellaneous advances. We will understand some of these terms like overdraft, cash credit, discounting trade bills later on. The funds lent out by banks contribute a great deal to trade, industry, transport, and other business activities. We will understand the term bank overdraft. It is a facility in which the banks allow the current account holder to overdraw his current account up to an agreed limit. The clients generally avail the bank overdraft facility to meet urgent and emergency requirements. Bank's overdraft is the most popular form of borrowing. The bank charges interest on the amount overdrawn by him. It means that suppose you are having a current account in a bank and you are having only rupees 1000, whereas you are to make the payment of 11,000. So you are having shortage of 10,000 rupees. So you can avail the services of bank overdraft and make the payment to the concerned party. When you will receive the payment from some other person, you will deposit the same amount with the bank and the bank will charge interest only the amount overdrawn by you. That is, if you are having the overdraft facility of 10,000 but you have used only 4,000 and that too for 15 days, the bank will charge you for these 15 days only of the amount of 4,000. It is possible that you are having overdraft facility already sanctioned and that amount is 10,000, but you are using only 4,000 in excess of the amount already lying in your account. So the difference, so the amount interest will be charged only on the amount actually withdrawn by you, overdrawn by you. Next is cash credit. It is short-term cash loan facility to the businessman. This type of funding is done by the bank only after the required security is given to the bank. This credit limit is normally a percentage of the value of collateral security such as stock or property. That is, if you are having a stock or property, say rupees 1 lakh, the bank may give you cash credit facility of say rupees 50,000. Next is discounting of bills of exchange. In this case, you are having a bill drawn on some other person and you will receive the payment say after 10 days, but you require money now. Under this system, the banks advance loan to traders and business firms by discounting their bills. The banks deposit the amount in the holder's current account after deducting the discount and wait for the bill to mature when they get back its full value. It means that if you are to receive a payment from some other person, then they will discount your bill. They will get the bill, bank will get your bill and they will make you the payment of the bill. That is, if you are to receive rupees 10,000 from another person, the bank will not give you full 10,000. They may give you say 9,500 and they will deduct rupees 500 as discount or interest and say the payment is to be received by you after 15 days. Then the bank will receive that full payment of 10,000 from the other person after its maturity date comes, when its maturity date comes. Next type of facility is the check facility, which is provided by the banks. Banks render a very important services to the customers by collecting their checks drawn on other banks. It is the most convenient and inexpensive medium of exchange. there are two types of checks, mainly bearer check. What is bearer check? A bearer check is one that does not has the word bearer on the check cancelled. If you see a checkbook and a particular leaflet, you will find that there is written pay. Where here we have to write the name of the person, Mr. This. Here it is written or bearer. If you do not cut this word bearer, here amount is written, how much amount is to be paid. If you do not cancel this word bearer on the check leaflet of the check book, then it is will be known as bearer check. The holder, when giving it to another person, need not endorse the check. This type of check is encashable immediately at the bank counter. No identification is needed when a bearer check is presented for encashment. That is, it means that you may have drawn the check in the name of Mr. say Anita, Mrs. Anita, and you have not cancelled bearer. So Mrs. Anita may give it to some another person, and that another person becomes bearer. That is the holder of the check. So Anita is not to write anything on the check on the front or on its back side that that person will come and collect the payment. The bank will make the payment to anyone who is having this check. Next type of checks are cross checks. In this case, suppose this is the leaflet of the check. This is the name of the bank. Here it is written as pay. Here it is written as amount. Here are the signatures. There we usually cross two lines right here on the left hand side. This is known as cross checks. Now we will read what is written. A cross check generally is a check that only bears two parallel transverse lines on the face of the check, usually at the top left corner. The crossing of a check is the instruction to the paying banker to transfer the specified amount to the pay account from the payer account and not over the counter. It means that when a particular leaflet of the checkbook or when a particular check is we enter mention two lines, we cross the check, then the bank will not make the payment to the holder of the check on the counter. The said payment will go into the account of the person whose name is written here. Next function of bank is remittance of funds. Another silent function of commercial banks is to provide the facility of fund transfer from one place to another. The transfer of funds is done by using electronic payment system, bank drafts, pay orders, etc. And the bank usually charges normal commission for the same. It means that if we are living in a place, say New Delhi, and we are to send to our relative who is living in Mumbai, so we can approach the bank who will issue a draft or pay order, or they will send the payment to our relative through electronic payment system, and for all the services they will charge a nominal commission from us. Next come the some of the allied services which are provided by the banks. These are say like locker facilities. Banks also pay our insurance premium and make other bill payments as instructed by the banks, by the customers. Of course, they will make the payment from our account. Banks also provide underwriting services and help the companies to raise capital through initial public offer. Next, an important term related to the banking services is bank draft. Bank draft is also known as DD or demand draft. It is an instrument which is used by the bank for transfer of funds. In the case of the check, we sign here. that our signatures are there, and our check may or may not be honored by the bank because of some problem in our writing date, or writing the name, or in writing the amount, or there may be some difference in the our signatures. But in the case of bank draft, these types of problems are not there. A bank draft is always honored by the other bank because it is signed by the authorized official or officer of the bank. Any person can obtain demand draft after depositing the amount in the bank. It is drawn by a bank branch on another branch or on some other bank branch at the place of destination. The bank usually charges some commission in lieu of demand draft. Now, next topic is our types of bank accounts. Four main types of bank accounts are saving deposit account. First is, this type of bank account encourages the small savings of the households. The rate of interest given by the bank on this type of account is very less as compared to the fixed deposit account. In India, the interest on saving deposit is decreasing as the year is passing. Firstly, it used to be say 6%. Now it is somewhere between 3 or 4%. Current deposit account. This type of account is suitable for businessmen or institutions or companies. Generally, banks do not pay any interest on these accounts. In this account holder can deposit money any number of times in a day and can also withdraw money several times in a day. The bank may charge some service charges for this type of account. Next is a recurring deposit account. What is this type of account? Suppose we may deposit 500 per month in this account for a period of say 1 year, 2 year or more. So let us understand it in detail. In this account, a depositor deposits a fixed amount every month for a specified period, and the total amount is repaid with interest at the end of the particular fixed period. Suppose we are depositing 500 per month, and the period of recurring deposit account is 1 year, and the interest which will be given by the bank to us is 6%. After 1 year, the bank will give us 6,500 into 12 is equal to 6,000 plus interest, and the total amount whatever it comes will be deposited or given to us in our account or will be given to us. Generally, this type of account is open to finance pre-planned future purposes such as purchase of car, AC, purchase of AC, wedding expenses of daughter. It means that whenever we think that we are to make some purchase of heavy amount, or to we are incur some heavy expenditure on particular item or on particular function, we may open a recurring deposit account. Rate of interest on RD account is generally higher than that of saving account deposit. Next comes fixed deposit account. In this account, money is accepted for a fixed period, say 1, 2, 3 or 5 years. Here we are not to deposit per month. Here the amount has to be deposited with the bank in lump sum. Suppose we deposit 50,000 in the bank for a period of say 1 year or 2 year or more. After that, we may say we get 7% interest. After 1 year, the bank will give us rupees 50,000 plus 7% interest. Whatever comes, that will be given to us or deposited in our saving account or whatever method we adopt. If we want that there is a problem in financial problem in our house and we want to withdraw that amount after say 6 months, whereas we have deposited the amount for 1 year, then the bank will charge interest penalty from us. That is, they will not give us 7%. They will charge some penalty. That is, they will charge some interest from us over and above 7% given by to us. That is, they may give us say charge penalty. That is, they may give us 5% for say 6 months. It may depend from bank to bank interest for that period. The longer the period, the higher the rate of interest. If the period of FD for fixed deposit account is more, that is, if it is not for 1 year, say it is for 5 years, then it is quite possible that the rate of interest may be 8%. The amount deposited is repaid with interest at the end of the fixed period. There is also a provision of interest penalty if the amount deposited is withdrawn by the depositor before the specified period of time. Now our topic is e-banking. E-banking means electronic banking or banking using electronic media. E-banking is also known as net banking, online banking, internet banking. In this new digital marketplace, banks and financial institutions have started providing services over the internet. E-banking is a service provided by many banks that allows a customer to conduct banking transactions over the internet. Through e-banking, one can manage savings, check accounts, apply for loans, pay bills over the internet using a personal computer, mobile, telephone, or handheld computer, that is personal assistant, digital assistant. Whenever someone withdraws cash from an ATM machine or pays for groceries using a debit card or credit card, the funds are transferred via e-banking. E-banking promotes paperless or cashless transactions. E-banking comes with a number of rights and responsibilities as well as fees. The range of services covered under e-banking are ATM, point of sale terminals, electronic data interchange, credit cards, electronic bank transfer. The two ways in which ETFs can be done are NEFT and RTGS. We will understand each of these terms. Now, what are the benefits of e-banking to the customers? E-banking is available 24/7. Next, it is very convenient for the customer to utilize e-banking as they are not required to visit the bank every time. They can make some of the permitted transactions from office or house or while traveling via mobile telephone. There is also no need to travel with cash. It provides great security to the customers as they can avoid traveling with cash. E-banking is quick and secure. Funds can be transferred between two accounts instantly by using NEFT, RTGS or IMPS. Further, the account as well as the transactions are secured with password and unique user ID. E-banking has also improved the quality of the services. Customers are now more satisfied. The banks also stand to gain by e-banking because e-banking has also benefited banks. Those banks who are advanced in e-banking, they are having competitive advantage over other banks. E-banking has lowered the transaction cost for the banks. By e-banking has given unlimited network to the banks and is not limited to the number of branches. The bank can fulfill the various needs of the customers over the internet. E-banking has reduced the load on branches by establishing centralized database and by taking over some of the accounting functions. Now comes the main types of digital payments. First is banking cards. The customers can make digital payments for online transactions using debit card or credit cards. As per a report, 55% of United States consumers use credit card for online payments in 2021. Next type of digital payments is mobile wallet. In this case, an app, for example, Paytm or MobiKwik, is downloaded on the mobile. This digital or mobile wallet stores debit card or credit card information or bank account information in an encoded format. One can also add money to a mobile wallet. One can use this wallet to make payments and purchase goods and services. Next comes point of sale terminals. If you go to a shop, you may find this type of device. This is called point of sale terminal. It is a handheld device which reads banking cards. Here you can see this is the banking card. It may be credit card or debit card. To make electronic funds transfers, the terminal typically displays a secure keypad. This is the keypad. For entering PIN, this is the screen. And here, this is the point for capturing information from the cards. And this point of sale terminal requires an internet connection. Next comes internet banking. It is also known as internet banking or online banking. It is a digital payment system that allows the customer of a bank or financial institution to conduct financial and non-financial transactions through the internet. Customers can use internet banking for fund transfer, online bill payments, online shopping. We can transfer the funds by use of internet banking by following three methods, namely NEFT, RTGS or IMPS. NEFT means National Electronics Fund Transfer. It is a mode of money transfer wherein you can transfer funds electronically from one bank account to another bank account. That is, if you are having account in SBI and you are to transfer the payment to another bank, say PNB, you will use NEFT. NEFT transactions are carried out in batches. It means that if you have sent an instruction to a bank to transfer the payment, it will be not, then another customer has also sent, this is the third customer, then a batch of say 3 persons customers instructions will be made and the transactions will be carried out. Now comes the RTGS. It is a real-time gross settlement. It is a funds transfer system in which transfer of money takes place from one bank to any other bank on a real time and on a gross basis. Now we will understand the meaning of real time and gross basis. Real time means that the transaction is not subjected to any waiting period. The instructions are processed at the time they are received. Suppose we have instructed the bank at 12 hours and it reaches the bank at 12.01 hours. The bank will carry out the instructions immediately. Gross settlement means the transaction is settled on one-to-one basis without bundling with another transaction. That is, whenever you instruct the bank, it will be carried out immediately. In other words, your request to transfer funds is carried out immediately. RTGS is for high value transactions. In India, the minimum limit for RTGS transfers is rupees 2 lakhs, where there is no maximum limit of the amount. Now we will also understand what is meant by IMPS. This term is used in India. It means instant money transfer service. It is facilitated by NPCI, National Payment Corporation of India. This type of service allows people to send and receive funds from saving accounts in real time. The service facilitates interbank transactions through mobile banking and internet banking. This service is available 24/7, 365 days. IMP charges are quite nominal. The maximum transfer limit of funds through IMPS is 5 lakhs. However, it may vary from bank to bank. While the minimum limit is usually rupees 1. However, the limit may vary from bank to bank. Now we will understand the meaning of micro ATM. Micro ATM is basically a mini ATM. It is a developed version of POS terminals. Micro ATM has advanced features like biometric scanner, that is fingerprint scanner attached to it. In the case of ATMs, cash transactions do not require human interaction, human intervention. That is, you will go to the ATM machine and you can withdraw the cash. But in the case of micro ATM, a person is appointed by the bank, which may be known as business correspondent. He will act as cash handling. In the micro ATM operations, the business correspondent manually accepts cash deposits from the customers, feeds the data in the system, and he also makes cash payments manually to the card holders, feeding the debit instructions to the customer account. Micro ATM can be carried by a bank representative or authorized agent at remote locations or rural areas. So you can observe that micro ATM is only a mini version of the big ATM, where a person called bank representative helps you in withdrawing or depositing the cash. Basically, it is for the rural areas where ATMs are not located, and they will can get the facility of cash withdrawal or depositing of cash. For the micro ATM, we don't have to depute security guard. We do not have to take a premises on rent. There is no need of electricity charges to be spent. There is no need of any maintenance on AC or extra. However, the deposit or withdrawal of money is possible only when the business correspondent is available along with the micro ATM. If you like our video, please like, share and subscribe our channel. Thank you.